Welcome. This is Dave Lucas from NYSAC. This is another County Finance School webinar. Today we want to thank you for your time out of your busy schedules to participate in this webinar. And today we will be presenting a program on fraud protection and detection. NYSAC wants to thank our sponsor today, PERMA. Public Employee Risk Management Association is the largest and most successful self-insurance pool for public entities in New York State. They have been providing workers' compensation benefits for over 35 years to more than 550 municipalities who have chosen PERMA to manage their claims in insurance, workplace, health, and safety. PERMA has been a longtime supporter and sponsor of NYSAC educational programs, and we greatly appreciate their support of today's webinar. And now I'm going to turn over to Annette for a little housekeeping announcements.
Thank you, Dave. And thank you everyone for joining us this morning for another in a series of County Finance School webinars. I'd like to give you a couple of housekeeping points before we begin. This webinar is being recorded and will be posted with a PDF of the slide deck on the NYSAC website at about noon today. You can find those items, the recording and the slides, at www.nysac.org. And then just click on the Education tab, and then a box will drop down, and then click on Finance School. Just look for it under today's date. There will also be a document posted as well that is this OSC's CPE credit form if you need it. You can also find that form for immediate download under your dashboard under the tab called Handouts. We ask that you submit all questions in writing today via your dashboard under the Questions tab. Simply click on the Questions tab on your dashboard. It will drop down and you can type in your question, and we will answer those questions live at the end of the program during the Q&A session. Dave, back to you.
Thank you, Jeanette. Today's speaker is Will Naylor with the Office of the State Comptroller. He's with the Local Official Training Unit. Will is an auditor in the Division of Local Government and School Accountability. He started his career with OSC in 2008, conducting performance and fraud audits out of the Rochester Regional Office. In 2016, he joined the Local Official Training Unit, which is responsible for developing, coordinating, and presenting training programs for local officials across the state. Will is a graduate of SUNY College of Brockport and is a certified internal auditor and certified fraud examiner. So again, we want to thank our partners at OSC today for presenting and also for helping us with our CPE training efforts for our county officials. Will, I'm going to turn it over to you now. Yes.
I'm sorry for interrupting. We also want to thank our sponsor today, PERMA, which is the Public Employer Risk Management Association. It's the largest and most successful self-insurance pool for public entities in New York State. We've been providing workers' compensation benefits for over 35 years to more than 550 municipalities who have chosen PERMA to manage their claims and ensure workplace health and safety. PERMA has been a longtime sponsor of NYSAC educational programs, and we appreciate their support today. Will, I'm going to turn the presentation over to you. Just going to switch screens right now. And there we are.
Perfect, thank you. Good morning, everyone, and thanks for having me here. So we have a great topic to cover this morning, fraud prevention detection. In a normal year, I think fraud is something that should always be in the back of our minds at least, but especially during a pandemic year, it's something we want to think about and talk about because we have to check out the versatility of our internal control system, especially as some of us saw during the initial months of a pandemic. What happened to our operations? Did we kind of move to a standstill in some departments? And how things change, especially with executive orders at the state level, county level. And did controls go by the wayside anywhere? And could something have happened within that time? So some of the objectives we're going to be going over today, we're going to talk about what is fraud, abuse. We're going to be looking at the aspects of the fraud triangle, and then we're going to talk about, how can we go about identifying fraud areas, risk areas. And throughout this, I think the most important is we're going to kind of cover some examples of what has happened, and we're going to cover some of the audit issues too that we identify out there, our office, with counties. So off the bat, I like to talk about, on our website, which you can subscribe to, and you can get a weekly email from Comptroller's office. We have a newsroom, and in that newsroom is always some great resources about what is happening, what are we seeing in various entities across the state. Fraud can be a pretty heavy conversation because I recall when I started the Comptroller's office 13 years ago, when I first got interviewed. Before that, I came from bookkeeping, doing things like that, campus bookstore. And one of the interview questions was, in your position, could you steal from your employer? And the first thing we jump to whenever we talk about fraud, especially when somebody gives you that directed question, you get into a very defensive stance. No, nobody's stealing. I couldn't do that. But we're not. That wasn't the question. The question is, could somebody? And when you think about it, and again, when you talk to, depending on what your position is in county government, talk to department heads, managers, could somebody steal something of value from your county? And it's critical conversations to have. And I doubt you can go to many board minutes of any entity in the states and find that, that question in the conversation of, could anybody steal? Because it's something that, we like to hope nobody would. We try to put our trust in people, but it's very relevant, especially with how fast things can change. So we start with, what is fraud? An illegal act involving obtaining something of value through willful representation. And I think the most important part of that is the intent. Now, I'm not an attorney. I don't charge people with anything. As an auditor, the job is you have criteria, you test against it, and you determine, what effects are out there. Maybe the effect was fraud. But, while the courts will determine the intent, that is very important, because, obtaining something illegally, or being even complicit maybe in some kind of activity, we have to have a clear distinction between fraud and mistakes. Is a mistake fraud? Right, so we think about, we have our county clerk's offices, we have over-the-counter transactions. You collect the money, you deposit it, maybe you forgot to record a transaction, right? Is that mistake fraud? Well, no, because again, down the line, hopefully, you're going to be matching, your deposits, you're going to be doing your bank reconciliation, you're going to say, hey, why are our records off? Oh, this didn't get recorded. And then you're going to back into that and say, why? How did that happen? And hopefully that never happens again because you change your processes. But we need to be careful. One of the recent frauds that we had actually in the newsroom on our website release was, and this one, looking at different levels of the state, this is actually at the state level. This was in a state police garage. Two individuals, they ended up stealing parts from the garage and selling them and using them value. Actually, one of them in a private business of their own, because they ran their own car garage business. Now, we think about that, and we think about, county fleets. I'm sure you all have garages out there that you're going to be doing work on your own vehicles. Could this happen? Could you have employees stealing parts from your garage? And the answer is probably sure. I mean, could somebody walk out with a part or a tool or supplies? Could that happen in any department, in any municipality across the state? I mean, we have supply cabinets. We, some people move to some remote settings with work. So this intent, though, this is something, that they had to do it on purpose. So is mistakes, can sometimes that fall into that realm? Yeah, and we're going to talk about maybe some complicity a little bit later as we look into some more examples. But we need to make sure that this doesn't happen. We're going to go through all the different things and how to risk assess and make sure that hopefully, you know, these major holes in any internal controls can be found. Examples that we see often with fraud, theft of cash. Straight up, they stole it. And it could be just stealing from a drawer. It could be substitution. Somebody received a check in the mail and then substituted it later for cash out of the drawer, so our deposits weren't intact. Forgeries, falsifying accounting records are big. A big one though too that I think really can be brought up during a pandemic time is, you know, as we see a lot of remote workers, you know, people were socially distancing, but I don't think fraud was socially distancing itself from operations. But where are your people? Where are your employees? Showing up, getting the job done. I think a lot of employers in any industry or government are looking at that if they have remote workers of, are they actually doing the work? And, you know, because when we think about theft of service, this is a huge one, because we think about all the reporting we do and all the benefits from the reporting. We think about the retirement system, right? Time in and your salary is going to be computed to what you're going to get in terms of retirement benefits. So how do we make sure that these things don't occur? And a lot of these things, they're wrapped together, because once we, you know, identify frauds, and we've seen them through our audits, a lot of these charges kind of go together. There was a theft of cash, but there was also the falsifying of accounting records to conceal that fraud scheme, whatever that was. Another one that we have up on our newsroom currently is a school district treasurer that was able to steal about 30 grand by just depositing checks that were actually meant for a federal program into a bank account controlled by them. Now, you know, this kind of lends itself to look at areas of interest, specifically areas where there might not be a lot of financial activity. Are there any stale bank accounts out there? Maybe with your jails, commissary funds. So any stale funds are a good place to look for fraud. And this person was able to just directly, you know, federal funds, which is never a good thing, because it just bumps up state charges to federal charges. But they just deposited these checks into this, and maybe that federal program needed it, maybe it wasn't doing much. And we need to figure out, you know, why, how, you know, those are the questions that often come up whenever we look at any fraud or examples of fraud. It's, how did this happen? Why didn't anybody catch it? You know, the state police garage, that went on from 2015 through the fall of 2020. They were able to steal supplies and parts from the garage and use it for their own means. And, you know, but in the investigation, they were able to recover $25,000 worth of parts and things. Now, over that time span, again, we think about just the level of government, we're talking about counties here, that, you know, over 5 years, a couple of parts, that could be a couple of invoices a year, or it could be a lot of small parts, right? So how did they get away with it, and what did they do? Did they conceal things? Did they manipulate invoices and things like that? So when we understand what we're looking for and how things could be different, especially with like the falsifying accounting records, it can help us to, again, try to fill in any gaps within our controls. But we have to, not everything is straightforward. There's the gray areas. So while we know what fraud is and that intent to steal something or take something of value, abuse gets a little bit more gray. We have behavior that is improper when compared with behavior that a prudent person would consider reasonable, given whatever those operations are. Now, it's weird to think about this because maybe if you're at the managerial level, you supervise individuals within a department, whether it's in county government, maybe you're on the board of supervisors, you have a separate job, any line of work. Ever feel like you have to tell somebody, and if you don't tell somebody something, then they don't understand they can't do it. Like you have to tell somebody, don't steal or else, but it sounds a little bit weird. But job descriptions, knowing what somebody's role is, what they should and shouldn't do, having proper training can often, be something that can avoid abuse. Oh, I didn't know that I couldn't do that. I didn't know that I couldn't use the credit card for personal things, and then reimburse it later. I didn't know that I couldn't cash a personal check from the change drawer in the county clerk's office because we needed money to go out to lunch that day. We needed cash to go buy lunch. Simple abuses like that I've often seen are the benign transactions necessary to then build up to bigger frauds. I've actually seen that in a clerk's office where somebody substituted their own personal check because they needed cash that day for some other purpose. And what happened? That deposit that day was not intact of the actual cash checks, money orders collected from taxpayers and residents that day. Now it had a personal check. Hopefully they cleared, because nothing worse than a bounced check, but it wasn't in the form as collected over the counter. So we need to think about that, because those benign transactions mean that somebody was able to take control of a weakness in the system and get away with it. Another big one is, again, thinking about those garages that we have out there for road work or whatever else, taking care of your fleets of vehicles, taking tools home, right? You work in that garage, you're building a deck with your buddies this weekend and you say, you know what, I don't have this tool, but here it is in the garage. I'll just borrow it for the weekend. And what happens? Well, you take it home, you return it, you take it home on Friday, you come back to work Monday morning, you replace it, put it back, nobody's the wiser and everything's fine. Again, slippery slope, right? Do you have any inventory policies, procedures about this? Strictly saying, do not do this. If you do this, then something could happen, because now that person knows that they can do it. Maybe, that while they were with their buddies, they were talking about, hey, yeah, I borrowed this from work. Oh, yeah, I got a project. Can you grab this for? Oh, yeah, sure. Then things start missing. Then, then you're buying more tools or replacing tools more often because something happened outside of work. Maybe that tool broke. Maybe they just didn't return it and nobody was the wiser because you use that tool every once in a blue moon. So these abuses can often lead into the bigger thing. And so this is often where we want to look at, what could go wrong, because this stopping it at this point is way better than saying, they got away with 25,000 worth of parts. Examples of abuse: incurring excessive expenses. We've seen audit examples of this happening where, and this can easily happen at the county level, because buying in bulk, supplies and things, materials, road materials, whatever it might be. And it can be a slippery slope of, hey, if you buy this in bulk from this vendor, they're going to give you something. Maybe it's a Home Depot gift card. Maybe they're going to give you an iPad for buying that much. But what happens? Well, maybe you needed all that materials, but the person that was in charge of procuring that found out, hey, look, I can get this in exchange for it. Maybe they followed everything else to the T, included in your procurement policy. They got all the quotes and everything, but they still got some kind of vendor kickback almost of an additional perk that nobody else knew about. Incurring excessive expenses is also just something without that perk that can be problematic. Because again, when you have too much of something, did you need it all? Are you use it all? Can it go bad? Anything like that, where you need to also look at, is it prudent, especially for our main shareholder, the taxpayers, to make sure that it's in line with what the needs are of the operation. And again, misuse of municipal equipment or supplies, as I mentioned in that last example. But this is a great time where we really want to look at personal use of anything within governments, especially over the last year, especially computer use, phone use, anything like that, walkable assets, laptop use, and just any kind of vehicle procedures, policies or any tool usage or anything like that. Make it clearly identifiable within those policies, procedures of don't do this. This is not for personal use. If you do this, then you could be, and that's maybe where, you know, it leads into more personnel, human resources talks there. Because what it comes down to at the end of the day is what is the implication? The number one thing for especially government is costs. And fraud is an interesting beast in that when we look and compare to private industry, you know, there's lost departments, right? Many businesses plan or budget around, you know, a percentage of loss, especially in the retail industry. It's not something that we can really say or do in government. You know, taxpayers don't want to hear that you just lost $10,000 and you just wrote it off as to, those tools went missing, sorry about that. And it definitely leads into the bigger implication of just that. We tax every year to provide the services and operations that the taxpayers need, the essential services out there. And a loss of public confidence and the reputation of your local government is at stake. It lends itself to go as far as, you know, politics and all that, but it's really, you know, we need to make sure that taxpayer dollars, we're accountable for them. There's a large transparency, and to show too that, you know, operations are being managed appropriately. I mean, you go back to the example of just taking tools home and, you know, building deck over the weekend with your buddies. You know, all of those people are taxpayers too, and they just heard that, hey, they're taking things out of government, and that can go on and on and on, and that, you know, that reputation of government can just spread like wildfire, and we don't want that. We want people held accountable. You do your work at the county, at the local government, and you do it well, and you go home, and we make sure that all of the assets that belong to that local government are protected. So we kind of get into from this, you know, the hows and whys of what is fraud, and we start with the fraud triangle. This is, you know, where we can see the underlying issues present, how we can start seeing, you know, it's people, it's the human nature of people to, you know, those that want to commit a crime, they're going to do it. But each of these elements are there. So we're going to talk about each of them. We're going to talk about what we can control and what we can't control. That is really important whenever we say, hey, do we have internal control weaknesses, and can we stop them? So we're going to talk about underlying issues, incentives, pressures, rationalizations, and then we're going to fall on the opportunity, which is really the control one that we can get there. But by at least eliminating one of these areas, it really diminishes the risk that fraud can occur. One other one that some models have actually taken it up further though too is from a triangle to other shapes is capability, because in order to have the fraud mind, not only does an opportunity have to exist, but the capability to execute that fraud needs to be there as well. And we'll talk about that too as we kind of go through these. So incentives, pressures. I think definitely over this last year, people are feeling it, and I think most of it has been, you know, external pressures as well as internal pressures. There has to be some kind of motivation to get somebody to say, hey, I want to steal, I want to take something of value from a place. And it can be so many different things. It can be finances have been a big one over the last year, and if we look at, you know, articles and headlines that come out related to fraud, we're going to see them going out, because as we said earlier, you know, how long can a fraud go on? Frauds can go on for years. We talked about that garage one going on for about 5 years. And so we're just at the tip of the iceberg of getting out of pandemic. So we're going to see the implications really of the last year of any major ones that have been frauds that have been identified going over into the next 2 to 3 years, I imagine. But what motivates somebody? And this is an underlying thing. It's the why you want to commit something, and it's not easily identifiable within people, right? We can't be asking certain things especially when you're hiring people into government, or some things just are too personal that you don't ask as a manager in most work situations. So saying, hey, how are things at home? Can you pay your bills? We don't know all the time. Did somebody's spouse get laid off? What's going on in the home life, right? Childcare over the last year. So all these kind of pressures can build up and can cause people to want to steal. But other incentives could just be, just your personal net worth threatened by financial performance. And that comes down to, especially if you're in the position of CFO, as many of you are, it's looking at, nobody wants to be on the sinking ship, especially in government, right? That's why we want to have healthy fund balances and all of that, right? Because your job can be on the line. So when we think and talk about frauds too, the two broad categories that we often see when it comes to frauds being committed, it's going to be asset misappropriation, and it's going to be financial statement, fraudulent financial reporting for the most part. And so some of the incentives and frauds can actually just come down to that, just reporting bad information to make yourself look better. Now, thinking about frauds and how they're initially detected, especially as we get to these underlying, what causes somebody to want to commit fraud, studies and reports come out all the time, surveys across the board of frauds that occur. And I don't know if anybody can guess out there, the number one way that frauds are initially detected, and this one tops out the surveys most years that they're given, it's tips. So, I'm going to repeat this now. I'm going to repeat it later in this presentation, but tips. And tips can come from anywhere, as we know. Employees, coworkers. You want to have a reputable way for employees in your government to be able to report things or complaints, things that they see, especially at the ground level, that could build into something larger. I saw this employee doing this, and so you want a reputable way to have that reporting take place. Tip hotline that goes to an independent source for review to make sure these things don't go away. The second and third choices that kind of are around the same level after tips, it's going to be management review and internal audit. After that, kind of drops off a little bit, but the next way that frauds are found is by accident. So you can see there's formal ways to informal of just stumbling upon it that frauds are identified. From there, so we have the why. What is causing somebody, and it might be my spouse lost their job, we lost a paycheck, I need more money, so I'm going to have to figure out other means of doing that, and that might lead them to the fraud. One of the other corners of this fraud triangle is rationalization and their attitude. What morals or set of ethical values do they have to allow them to commit a crime? Right? This is kind of what I always refer to as how do you sleep at night knowing what you did? And this can come from a number of different things. It's the justification of why they're doing what they're doing. It could just come from a general disregard for internal controls. And this one is very tough to, again, identify. So in terms of what we can control, not control, this one definitely is the not control, because I think we can all say at some point in our work careers that we know that one person that just comes to work every day and they're just purely miserable, right? No matter what you say or do, you can't get on their good side, and they just hate what they do. They hate the people they're around, and that's the end of it. Does that mean that they're a fraudster? No, it just means that it is what it is. But do they have disregard for internal controls? The need for monitoring or reducing any risks that are out there. So what could fall into this is if the people that cut the corners, right? Policies and procedures are there for a reason, and cutting corners is never a good thing. And if somebody took the time to write out procedures, they're probably there for a reason. It could be from a prior audit that took place where maybe us or your external auditor said, hey, you need to have better controls over this, so do this way. But over the years, again, if we don't look at this stuff, people might say, hey, there's a better way to do it. If we just cut out steps 2 and 3, this could be done so much faster. But in doing so, now the risks increase to what they were before. Behavior indicating dissatisfaction. Again, the grumpy person does not mean that they're stealing. But the grumpy person that was driving the beater up car, now driving the Mercedes-Benz, hey, where'd that car come from? Oh, I just decided to splurge this one time. And but they're also the person that controls a lot of deposits and things, and maybe they work in the garage, and maybe a lot of tools you've been noticing have been replaced within the last few months because things are going up missing. Those are big changes in lifestyle, can be something that show us that underlying thing. But these are often, I'm not encouraging people to go out and find the miserable person in the office and say, hey, I think you're stealing. And that's not the point of this. The point of it is to say, hey, well, what could be some of the things that could cause fraud to happen? So we want to really focus on the opportunity. If there's no opportunity, then something can't go wrong. And so what are these opportunities? It's often the absence of internal controls. It's the ineffective controls that are in place. So you have policies, procedures, they're just no good. And then on top of that, what could be is we do have policies, procedures, they work well, but managers say that, it's for you and not them. And that's a bad thing too when it comes to ensuring that fraud doesn't occur. So when we start to look at all the different opportunities, a lack of or deficiencies related to policies, records, duties, reconciliations, and oversight. Most of these you can look at. If you go and look up the county audits that are done or any audit that has been done, because many of the findings that are even at a town, village, city kind of trickle over to counties. Most of the recommendations are there should be policies or procedures over this, or there wasn't, or they were ineffective. So what you want to start is to say, hey, do we have a policy procedure over that? Okay, do the right people know about that policy or procedure? Because that is often sometimes where the gap lies, is that people just didn't know, right? As I said before, it's weird. Sometimes we have to tell people don't do that because this is where fraud could occur. Don't use this for personal. And again, what do these policies, procedures do when they're built soundly? Is they're often too, they help you in terms of liability. They're your shield when it comes to human resources or your personnel department and holding people accountable, where they can't come back later and say, oh, you didn't say that I couldn't take that tool home. I've been doing this for years. Lack of or deficiencies related to records, which can often lead to oversight, making sure that those that are supervising, there's a proper segregation of duties, managers have the right reports to review things that are going on, to make sure that they know what's going on with that capital project. Understand, hey, why are all these change orders coming in? Show me all the change orders, who's authorizing these, is the proper person doing them? Reconciliations. It's a great detection control in that, you're making sure that deposits and records match up and align. And I think the one great thing that we're going to talk and see about more in another slide, segregation of duties. When you have a larger operation like a county, segregation of duties is way easier than, say, a smaller town or village. So we want to make sure that we have the right internal controls in place, and all they are just processes affected by the governing board that allow you to know that things are going according to plan. They provide reasonable assurance that things are going right. And that is the most important phrase of any internal control definition, reasonable assurance. Nothing is going to be 100%, and it can't be. I think a lot of us have seen that just, over the last 20 years where technology has come. Technology has changed so much that it's very hard to keep up, and we keep having to modify things year after year. But what we want to know is that people are still following the policy procedures. They know about them, and that if something does go wrong, we can find it quickly. It's not just people knowing what they should do. It's if something goes wrong, what is the time frame that it would take for us to identify it, right? So again, if we think about your county clerk's office and something not reconciled, well, if it happens on the 1st of the month, and well, we count the drawers back, we make the deposits, but we don't do really a formal reconciliation until the end of the month, well, again, that could be 30 days between the error occurring and the ultimate bank reconciliation taking place, which now gives you 30 days to go figure out where could that have gone wrong, which again makes you want to ensure that you have proper reconciliation, probably daily, again, with how many transactions flow through those offices, counting back the drawers, making that, ensure that ties out, multiple signatures, the person whose drawer it was, the supervisor, to make sure that if they sign off, that deposit's prepared, goes to the bank, everything's in the records, and we're good to go. So internal controls, we want to make sure that financial reporting is reliable, because there's nothing worse than a bad report, an unreliable report. Operations are effective and efficient. A big part of this too is getting buy-in from your department and the employees within them. Asking them these kind of questions like, hey, how could we make controls better? How could, having those the fraud brainstorm sessions, which is something that we do during our OSC audits every time we get on site. It's when we often close the doors and you think that we're talking about you, and we usually are, but part of that is, a fraud brainstorming session of saying, all right, this is the area we're looking at. How could anybody steal from it? Just thinking broadly of how can anybody steal? Well, there's a cash drawer. I could just go and take the cash out. And then we say, all right, well, what controls do they have in place? Policies, procedures, reconciliations, all that good stuff. And then, so from that starting point of a cash theft, then we layer in all those procedures after that. And then we come down to the end of the day and say, all right, are they working effectively or not? And that's where our testing comes from. We say, all right, let's test those procedures to see if they're actually doing those things that they say in those policies or not, and what could be the possible outcome. Was there ever a shortage? And go on from there. And then that's where we derive our recommendations from. Limitations of internal control. No matter how well designed, your internal control system can only provide reasonable assurance. So things that it can't detect often are errors. Many of you, again, being in the CFO's office, it's, if you charge things to the wrong account, it's an expenditure is an expenditure, even though it might have the wrong coding. Not something you're going to identify because everything else balances. Collusion is a big one. And, where can corruption and collusion come into play? Conflicts of interest, bribery, invoice kickbacks, bid rigging. This is where I want to bring back in, complicity. What you do in your office may seem so benign, but it could add to a larger problem. For instance, those in your purchasing departments or procurement departments, knowing when to cut off contact with those that are bidding on big projects, right? By you picking up that phone and answering another question of a possible bidder, and no other bidders knowing that whatever that information was, that could be a detriment to that, and it could give somebody an unfair advantage in the bidding process. Again, is that fraud? Was it a mistake? Did it break policy of establishing a cutoff date for vendors, or if you do have a question answered period for vendors, it's very public and transparent. So we want to be very careful of that. There's purchasing schemes or sale where if there's different levels of authorization. Collusion, again, one person initializing a transaction, another person releasing and authorizing that transaction, and then they both reap the benefits of it. That can be an issue. So again, there's definite limitations, and the one that you're going to keep seeing come up is management override. If management is doing something else completely out of what the policies, procedures are available and in place for all the other workers, then that's an issue as well. Now, implementing controls, especially when we look at them, the big thing that comes up, especially in government when I said before too, that there's no loss department, right? You don't have a complete department dedicated to that. So implementing your internal controls can be costly. You look at some IT systems out there, right? They have intrusion detection systems, prevention systems, all this stuff. Those devices and things and software, that all costs a lot of money. Can you afford that? So, while they often say the cost of an entity's internal controls should not exceed the benefits that are expected to be derived, it doesn't mean ignore the weaknesses. It just means that maybe we need to take a look at how and where in the system and in the operations we put the control. And this kind of leads us to prevention versus detection. So we have, prevention is going to be far more expensive than detection efforts all day long, because prevention, again, it's those complicated systems. It's segregation of duties, which means maybe hiring more people. And it's nothing that we're going to tell you to do, but we still want you to be able to identify where losses or the weaknesses are. Detection controls are the cheapest. This is running a report after the fact, right? You do your reconciliation 30 days after, and you find that error. Now you have to go back over those 30 days to say, hey, where did it go wrong? But reconciliation should be done at least monthly, right? So this is, where do you want to stop things? Where's the most risk? What would you rather prevent versus detect? Right? We think about things like inventory. Inventory is a simple one that would go back to those garages, right? What tools do you have? What is the lifespan of those tools? So your inventories and that asset inventory and lifespan of those assets, that all comes into play as saying, all right, is everything accounted for? Do you ever do spot checks? And that's an after the fact kind of thing. Prevention would be, locking up the cabinets and counting it before anybody leaves at the end of the day, which can probably seem like a tedious task versus, pop up inventory counts randomly throughout the fiscal year. So the steps of prevention detection, we're going to go through each of these. Communication, where we want to make sure that people know what is expected of them. And that is the biggest thing. And this could come from right at hiring. So it might be something that human resources is involved in, that orientation process. And ultimately too, what are the consequences? So people know that if they do this wrong up front, then that's going to be, they're going to be held accountable for that. And then we're going to have the checks and balances we're going to talk about, and the following through, which is ensuring that people are held to those consequences. When we look at the communicating those expectations and we look at the policies out there, it's really important to understand that, what roles and authority did we give somebody when we hired them? I've done many trainings where, one thing I ask, especially when we talk about procurement policies, it's, who have you given purchase authorization to? Make a list of it. And for counties, that's obviously, that's gonna be a lot longer list than many other municipalities. But then the second follow-up is, how many of you have had a day, half-day training on the procurement policy about obtaining quotes, all of the thresholds, credit cards, especially. If anybody's given a credit card, I hope that you have a credit card policy and that you have had at least those people have had training on their expectations and what would happen if any inappropriate charge were done. And a lot of times the people say, no, I've never had any formal training on any of that. But again, you're giving them keys to basically go out and say, purchase what they want, and it's asking for forgiveness later. So communicate up front, make sure those expectations are set, review, go back to those job descriptions. Do they match what people are doing? Do you need to add anything to them? But follow through. So readdress policies, procedure manuals, things that might have gathered dust. And again, it's important to look at these because of the pandemic year, where executive orders, maybe things were changed because in terms of policy procedures for that pandemic. And so, did the controls follow that? As we start hopefully getting back to the normal, Are we going to go back to what they formerly were, and are the controls still in place? And are there any gaps? Could something have gone wrong in the interim? But important too is the leading by example. Code of ethics. One of the big things that we often look at, especially at larger entities, cities, counties, it's related transactions. We look at, are people filing their financial disclosure forms? Some of the hot topics that we've been looking at, they've always been around, but we look at them even more, especially is, relationships, contractual relationships with contractors, county relationships with authorities, local development corporations, or any quasi-governments like that. Property deals, these are big things when it comes to ethics of knowing, does anybody have disclosures? Do they have any interest in those deals, especially at the managerial board levels that could, make things look improper. And it's not to say that, any of those contracts or relationships or deals are improper, but, were the proper disclosures done? Was, the county legal department consulted to make sure that everything was done on the up and up? So we need to be careful of, the appearances of impropriety, making sure that we're as transparent as possible. Private employment, that garage example, they had a separate garage. Do you ask that of employees, especially part-timers, just, at what level they are working at your government could say, hey, do they have any outside interest in a related fashion, right? Are they part-time engineers? Are they part-time mechanics that where their job at the county could bleed into something private where there's a greater risk? Again, not to say there is, but are the controls in place? You also want to address within your ethics, confidential information, those gifts I talked about, any kickbacks and things, refuse anything like that. Does anybody know what, do your employees or departments or department heads know what they would do if they were offered a gift like that? And the enforcement, what happens if there's a violation? We're going to talk about that violation in a second too. But policies, make sure that people know their responsibilities, know the limits to their authority. What are they being held to? If something goes wrong, are they going to get written up, right? Reporting relationships, which is financial disclosure forms. And again, a lot of these things aren't public, but they need to still file them. You need to make sure that you know where the risks lie. Do they have any interest in contracts when they hold the power to sign off on contracts or anything like that? And a big one too, when we look at policies, procedures, internet, email, computer use, anything like that. It's, for a while, we were going to the day and age of personal devices and things. But, when we look at the greater headlines and stories about, the infrastructure and the critical systems that are getting hacked and everything like that, this is an area that we really need to take a step back on, especially in government, of saying, who can bring a personal device and connect to the county network? People want, free Wi-Fi and things like that, so they're not eating up their own data plans. But every time a personal device is connected, another risk it comes into play. And that's a big thing too, is we need to realize that while fraud often holds the internal concern connotation to it, we need to look at external bad factors too. But what we do as employees of government can have a big factor in that. If we are doing online shopping on Amazon, or we click on the wrong website, did that just, and that's on the network, and we also, work in finance, and we do all our banking information, did we just let somebody in into, the network to do something malicious potentially? So I think internet, especially, and, knowing the controls, knowing the safeguards, knowing what to do, what not to do on the networks and county-owned computers is very important, and should be revisited often. But leading by example is the big one. Employees know when managers do not care. And again, it's one that it travels across all industries. the effects of a poor tone at the top. So non-existent or ineffective means of establishing, communicating the local government's accountability for public resources, ethics, especially regarding, your code of ethics or any conflicts of interest. It's going to increase the risk of fraud or abuse. People know when they can get away with things. When they took those tools home, they know, and they brought them back and nobody said a word, they know they got away with something. When somebody cashes a personal check out of a drawer and they went to lunch and the deposit made it and nobody checked on the composition of deposits, that they were made intact, they know they got away with it. And then it just builds from there. Test transactions, I've found in the fraud audits I've done, often lead the way to something a lot larger. So where is the greatest risk within your counties? We need to think about external and internal sources. So this is, where, if you do some homework and you just lay it out, what are your greatest risks? I think most people can say these days, when it comes to external risks, you want to look at how many contractors do you employ, right? Independent contractors. Are there any risks of them on capital project sites or anything like that? You want to look at, your computer systems, external, just bad actors out there on the web. They are going to be a major risk. You want to look at any cash sites, right? So where do we collect cash? How often, how much, who's responsible for it? Is there proper internal controls at those sites? You want to look at things too, though, because again, not everything is cash. We talk about tool supplies. How about this? Many parks departments, county park departments, you do rentals. While, deposits and things on those reservations of cabins and sites like that. But think about too, could somebody use it, maybe an employee, maybe they let their friends use a rental site that would normally make you money to a normal person, but because it wasn't in use, or maybe they booked it, but they didn't charge somebody, the absence of a charge is also something that you need to look at. Who is using county resources when they shouldn't be, right? So if they rented that nice cabin and they didn't pay, there was no deposit, there was no history of anybody supposedly being there over the weekend, you come back and things are broken, now what? Who's liable? So the absence and just gift of public funds almost, or public resources, can be a big concern as well. So how would you monitor these kind of things? Do you have control systems in place? Again, is there the proper education? You want to identify the location of all your tempting assets. So as I mentioned with cash, is there decentralized or centralized cash collections? What is offsite? Youth services, anything like that. Social services departments. You want to look at low-hanging fruit is what I often say too. Do you have vending machines out and around? It's funny, I saw there was a fraud years ago now that, while it's not something that counties have to worry about in terms of parking meters often, but the mechanics on those meters broke it on purpose and money was getting caught on the ledge. And when they go around, they were sweeping out all the quarters from this ledge in there. And that was a big issue. But there are civic centers, right? Well, parking garages in counties. Do you collect cash at those sites? What happens when there's tickets that, or the gate breaks and the gate is just left up, but somebody might be there and still collecting cash, what are the deterrences? Sometimes there's physical safeguards that we need to think about when fraud, right? Locks on doors are just physical safeguard. Cameras, security systems that are often in many of these places. Look at that small fixed assets, any small tools or anything, especially those assets that are below your capitalization thresholds that you often keep for depreciation and things like that within your financials. Are you still doing inventories? Who's in charge of those? Hopefully independent of those that are purchasing things that could easily have things drop off those inventories. So segregation of duty is still pretty huge when it comes to these things. Limit physical access. When we talk about internal controls, especially, again, the benign transaction or things, I have to mention, you know, especially any place that has an over-the-counter transaction, so we're really talking about county clerk's offices. Can any other departments, employees come behind the counter where cash is stored, right? Do you have physical cash registers that are locked? Are drawers locked? What do you use to secure the money? But anybody that comes in that office when those drawers are unlocked could potentially steal from you, right? So if you're the person in charge of that drawer and it comes up $20 short at the end of the day, you're going to be responsible, whether or not, you know, somebody was able to walk by or not. If it's in front of you, that's a problem. And the other thing too is, you know, things happen. One of my former jobs too was a accounting office at the front end of a Wegmans, so I know all about counting back tills, let me tell you. But what were the controls, right? By having somebody independently count back that drawer, well, the cashiers, we figured out if there was an overage or a shortage. Shortages obviously being worse, but everybody's human. And I think that's something, you know, that gets lost in government too, is the human aspect, is that mistakes are made. Bills stick together sometimes. Is one shortage a huge blown out issue? It shouldn't be. It's still something that we have to be accountable for. We have to report it. There has to be proper monitoring of it. But outside that, you know, then we say, all right, is it a repeated occurrence? Is there issues there? Is there more training necessary? Which could lead down to a human resource issue. But again, it's being able to identify and talk about it rather than, you know, somebody coming in, external auditor, us coming through and say, hey, why was there a shortage? Did anybody know about this? And people, oh, no, nobody knew about that. And kind of just sweeping under the rug. That is where, you know, we have breakdowns. And something else I'd like to bring up too is, you know, people say, oh, is OSC the last line of defense, especially when it comes to audits? And that honestly shouldn't be the case. It is the case in many circumstances, and then we come across frauds and things. But honestly, you know, our role is we come in to say, do you even have a defense system in place? And that is our job, is to make sure that locally you're controlling everything appropriately. And then again, we say, all right, how is your defense doing? Is there any weaknesses? And that's where we want our recommendations to come from. And we hope that our recommendations are more, this could happen versus a fraud took place. Other things we want to make sure are maintained and controlled so fraud can occur. Remember, especially in county clerk's offices, paper is a commodity. You know, we think about numbered forms and things, certificates that you issue. All of those have a value, and anything that can go missing is an issue. So you want to make sure that, you know, you're doing inventories. You're looking at what is in each of your drawers, making sure that sequences are being maintained. When we think about authorizations on certain things, signing things. I know signature plates are sometimes a thing in the past, but your check stock, some places still have rubber stamps with signatures on them. Who controls that? You know, when somebody goes on vacation, is there just another authorized party, or does somebody hand off their stamp to somebody else, and now they're basically acting as an agent of that person, which is a concern, right? Because if they have access now, maybe when you're back in the office, somebody can still get a hold of that stamp and authorize things. But placing IDs on high-risk inventory, things that walk, if any offices are, you know, went remote, I can see, you know, over the last year, many people that used to be desktop users are now laptop users. So making sure, again, you check in with your IT professionals, making sure there's IDs, and making sure that there's a good mechanism for when things get lost, that they're reported. Not for liability, but data and sensitive information is a big thing too, making sure you let the proper parties know when sensitive information is lost. When it comes to your controls, the segregation of duties, we want to make sure that three main functions are separate: authorizing transactions, maintaining the records belonging to those transactions, and then having the ultimate custody of those assets. Most often it's cash. And so again, if you have somebody at the counter, they collect the money, they enter it in the system, they count back their drawer, maybe somebody reviews that drawer, signs off on that reconciliation, deposits prepared, And then again, maybe that supervisor at the end of the month, they're doing the bank recs, which maybe they turn over to somebody else. They turn into their manager to then review, sign off that everything was done accordingly. When you can segregate duties as much as possible, it's always a good thing. And again, when you're going back and you're reviewing policies, procedures, and operations of departments, think about that. Think about how long it would take something to be discovered. If somebody took $500 out of a drawer, when would it be discovered? If they left at lunchtime and never came back. Would it take the end of the day? Maybe. You know, hopefully, you know, especially if you're counting back daily, would it take for somebody to be aware that that employee never came back from lunch? That too. But we also want many mechanisms. We want to find it as soon as possible. It's still the question of the day whenever we see these headlines, though, is how did it go on for so long? And some of it, again, just comes down to the concealment methods of it. People get so good at doctoring bank statements, invoices, that sometimes, you know, as part of your training, it's worth it just to, you know, look up on the internet or something. What does a fake invoice look like? How would we know that it changed? You know, following through to see if, you know, check names were changed later in the system or something. You know, go look at your cleared check images, see if, you know, who it was actually made out to and that things are aligned. Always remain alert to the possibility. Professional skepticism is the biggest tool of the trade that we have. And it's when we know we get too relaxed, it's where things can go wrong. So talk to your boards, talk to your legislatures, know what could go wrong, talk about new controls, talk about new policies. You know, have these public, transparent fraud brainstorming sessions. Make sure that, you know, you're listening to employees that do things on a daily basis. You know, ask them, as weird as it sounds, like, if you could steal, how would you do it? Use IT tools that you already have. This is really understanding your system too, is knowing what reports come out of your system. Again, before the pandemic, and any, you know, knowing what your office hours are, can you run reports to see who logged into the system? See who came in on weekends, who was coming in Saturday, Sunday, who was coming in after hours to do work. Can you run that and see is anything malicious? Is everything okay? You know, with a pandemic, some of that stuff is happening more often as we're trying to make time and socially distance and things like that. But what tools can your system tell you? Can it tell you who logs in where? Many buildings now have sophisticated systems that tell you who went in a building at what time, right? So are people going into the garage alone after hours? Who's using the fuel pumps? If you have county-run fuel pumps, right? Can you run reports of usage? Is there any usage that seems not practical when you trend it out over a year or two, right? How many, you know, unleaded gas-powered piece of equipment do you have versus diesel? And you can look and monitor different systems with those kind of reports. And audits, you know, trust the audits. Look at the management letters that come with your financial external audits. Look at things that have been addressed and especially not addressed year after year. Because the main thing that we want to do is we need to follow through. As I mentioned before, have a tip line, but make sure that when tips or complaints come in, they come into somebody independent. Because retaliation should not be happening for obvious reasons. And you need to make sure that people feel comfortable about providing that kind of information. You know, in a couple slides, I'm going to show that we do have our investigation line, which we encourage anybody, taxpayers, municipal employees, to contact us about. But, you know, wouldn't it be better if, again, your defense lines had these kind of things in place? And maybe, again, it's a county auditor position that reports directly to the board, right? We just don't want people reporting on managers and then the managers seeing the complaint and, again, throwing it under the rug. And this, again, when you have those bad communication channels, sometimes somebody that is doing something wrong can just throw it under the rug, and this is how it happens for so long. Ensure there are consequences. When something happens, whether it's, maybe it could be a management override, right? All other employees are held to these standards when submitting travel reimbursement or conference expenses or things like that. But when management does it, oh, they don't need all receipts. They'll get, whatever written on a post-it note. They'll get paid out for whatever. People and employees see when consequences are not upheld and when people get away with things. It encourages poor behavior of all other employees. And it's funny, I've seen some frauds where because there was collusion or maybe somebody was doing or performing fraud in certain departments, they were teaching other employees how to do it. And it kind of just stemmed on. So again, that garage, there's two people. I imagine there was one person at first that said, hey, look what I'm doing. I saw it in other audits too. I mentioned the one with the parking meters where the mechanic kind of purposely built a separate shelf that was collecting quarters, and they go and collect it. They taught that to the next person that was, going around doing the rounds with them. So we want to make sure that we catch things timely and people are aware that people are actually watching. Follow up, no consequences. People will catch on, and the negative ramifications will cause severe impacts. And again, the point is we don't want to, again, be catching this stuff. We want to make sure that your control system is so well put together that you are catching them without an external party having to come in and do it. Again, you do rely on your external auditors to come through and check on these things and do their limited testing. But proper supervisory procedures should be catching most things in most cases. And to wrap up, looking at the unique risk factors with management override, information technology. We talked a lot about the management override. We just want that proper tone at the top set, because when people are in in a position of power, it can be very easily to directly or indirectly manipulate or influence other things. And again, we don't want employees to be complicit. And so again, having that reporting line of, hey, something's weird's going on. I'm getting directed to go do this work over in this other building, and this is a private address or something like that. I don't feel comfortable in this. Having a proper outlet for a complaint to ultimately be reviewed, and it can be something and it can be nothing, but at least there's that proper outlet to make sure that management at all levels is held accountable as well. Looking at IT, we need to make sure that again, this is the hot topic, and we do need to review and go back to the drawing board in some circumstances of what personal devices are being used, what can connect to our networks, what are our critical networks, are there any standalone networks, and IT inventory is a good thing, whether again you have in-house IT or you outsource it at all. Know where sensitive information is held, know how backups are being performed, because these are the common IT deficiencies we have. You want to make sure that, again, if something goes down, you can get back up and running. If there was a ransomware on any system, what would you do? It's the question that needs to be asked, and you need to make sure that, again, people are not doing personal activities on county computers. Look at controls. Access rights, are they too broad? Are they limited just to that job function? Making sure everybody has an individual sign-in password. When you look at that, again, are there any, good question just to ask is are there any shared passwords? Is there any shared terminals where people use the same username and password, which is a critical system, you need to look to it, what is the underlying system of it? Make sure that, all systems can be monitored. Do you have any outdated systems? Do you know when people log into the computer itself? And you know when people then do a separate login to get into specific applications? So looking at systems, understanding that audit logs or exception logs that can come out of it is super important to do the best monitoring you can on these things. Nights, weekends, suspicious transactions. Some of the audits that have come out actually have to do with people changing rights. Have you looked at what health insurance benefits people are receiving. Does everybody receive the same package? Would you know if somebody who had access changed their policy with a provider that was better than everybody else's? Are you reviewing and running change reports on all personnel changes made within the system? Are they independent? Do you have segregation of duties of people that can add new employees to the system, and then people that can change their benefits? So maybe a personnel versus HR kind of thing going on. That's super important because we've seen actually where benefits have been changed, and it can be, again, the incentive over a pandemic could be maybe the spouse that held the insurance, they lost it, and now they need to say, hey, I'll just add this policy under here, and they won't realize that it's different than everybody else's because it's all tied in the same bill. So in summary, to wrap up the session, we just want to avoid the costs. We want to make sure people are aware. We want to make our taxpayers feel good that we are keeping people accountable with the taxpayer funds that we levy on them. So I'll wrap up. We do have a slide of just all of our resources. Again, if you don't have a tip hotline, you want to use we have an investigation hotline, a fraud hotline that we do. Again, we want to make more people aware that at all levels of government, people should be held accountable, not just county. And of course, we do have our local official training unit email as well. So I'll just wrap up on this slide and leave it here and see if we have any quick questions.
Thank you, Will. At this time, I'm not seeing any questions. There was a lot of material in there. At any time, folks could put a question in and we could always relay it back to OSC. So not seeing any questions, Jeanette, do we have any last minute things? I do want to thank PERMA for sponsoring this workshop and for OSC and their strong partnership through the years in the county finance school and educating county officials on best practices. Jeanette, any closing remarks?
Again, if you would like a PDF of the slides or to view the recording again, just go to NYSEC's website after 12 o'clock today and go to the education tab and then click on County Finance School and look for this program under today's date.
All right, thank you, everybody that listened in today.
Thank you.
Thank you, Will.